How do you take advantage of investing in Europe? And actually, what do you say to the ones that think that forecasts for earnings are just too high given the uncertainties ahead?
Europe is really one of the last regions where you can still find cyclicality at a discount. And obviously, when we think about what we've been doing in portfolios and really across the market, it's been taking shape as well. Investors have been looking to add cyclicality and inflation beneficiaries. And Europe is a region, when it comes to the reopening trade, that really is front and center. We think Europe's reopening is going to take place through the second quarter, probably more vigorously in the third quarter, and driven primarily by consumer health and pent-up demand. But when we think about valuation of European equities, despite the fact that actually European equities have this cyclical flavor, are typically correlated to rising US Treasury yields, Europe has lagged since the bottom of the pandemic and is often still an underweight in portfolios. So what we expect to happen and what we think is starting to happen just in the last few months is that Europe is being closed and taken back up to a neutral weighting. We are reticent to say whether Europe will become an overweight weighting in portfolios at large, because once we're through the next couple of quarters and there's very strong rebound that we expect to take place, we still think that the secular growth story for Europe isn't as attractive as we would see it in the US or Asia. So we do think that the rotation towards European equities can continue for another couple of quarters, but we still think that over the longer term, you want to be looking to the US, to Asia, and to mega trends when you're thinking about secular growth.